Hi everyone, it's Courtney-Ann, your local realtor. Welcome back to my channel. It's been a while since we've done a sit-down video, but we have to discuss something important today. Today we're going to be looking into mortgage rates versus rental rates and how the two directly relate to each other. So first things first, we're going to have to define the different types of banks. So every country has a central bank. In Jamaica, that's the Bank of Jamaica. Now, the Bank of Jamaica has many roles, most of which include policy making, interest rates, currency issuance, monetary policy, stuff like that. But the banks we're used to are the commercial banks, NCB, Scotiabank, First Global, etc. Now, these banks cater to everyday businesses and persons like you and me. So whether it's checking accounts, savings accounts, business loans, personal loans, mortgages, etc. So now that we've clarified that out the way, we're going to be looking at the different banks and their mortgage rates. All right, so here I just did some random stats from ChatGPT, and I've printed the mortgage rates to date, 2025, as well as a history of the BOJ's rates. So if you notice, BOJ has actually cut their rates several times. In fact, the current rate is actually 5.75%, coming from 6% in December 2024. However, if we pay attention to the current mortgage rates in Jamaica, where we have basically all the banks, JN Bank, Scotiabank, Sagicor, the National Housing Trust, which is NHT, and the average commercial bank rate, NCB, CIBC Caribbean, First Global Bank, and First Caribbean. A direct comparison of all of the mortgage rates at this time. So currently in the market, Scotiabank has one of the lowest interest rates at 8.50. Second in line is Sagicor, which is 8.75%. And third in line, I would say, would be JN Bank. Now, if you're an international client, these rates may be a little bit different for you. In fact, the lending ratio is different as well, because while in Jamaica, residents may qualify for a 95 to 5% ratio. If you're borrowing from overseas, we're noticing a trend nowadays of actually an 80-20 split, where they're actually lending overseas clients 80% and requiring them to pay down 20%. Now that we've had these rates side by side, we're going to be comparing what your estimated mortgage rates could look like versus if you were to rent your property, or from a tenant's perspective, what your rent may look like. Have a direct. All right, guys, so we're going to take an average mortgage. Let's use Phoenix Park in Portmore, St. Catherine, and we're going to be comparing the percentage increase between the mortgage rate and how that has directly affected rents to this day. So when I started real estate, which was 2023, Phoenix Park rent was 80,000 Jamaican dollars, right? And for most homeowners, their mortgage was estimated to be between 60 to 70,000 Jamaican dollars. So we're going to do some calculations here. All right, guys, so we're going to take an average mortgage. Let's use Phoenix Park in Portmore, St. Catherine, and we're going to be comparing the percentage increase between them. So that leaves us with, let's say, about a $20,000 variance to pocket as income, right? Which is a 25% profit for the average landlord. However, in 2025, so for me, I've been doing a lot of transactions recently where simple properties, 20 million and under persons are looking at mortgage payments of over $150,000 to $200,000. So in reality, a lot of landlords are currently operating at a loss as it relates to renting their home. I have a client that has a property in Brayton where they're renting for $85,000, but their mortgage is actually $120,000, right? So we're seeing a big difference where a landlord could have made profit initially, but no, it's not as possible, right? But let's focus on Phoenix Park Village. So Phoenix Park Village, currently the rental rates are between $110,000 to $115,000 Jamaican dollars, right? And the mortgage, I spoke to a friend of mine to clarify this. She said her mortgage is actually currently $83,000. And I also know another homeowner who also has a Phoenix Park whose mortgage is $120,000, right? Now again, we're moving from $60,000 a month to $83,000 to $120,000. So this is actually a 100% increase in mortgage payments. It means that had landlords referred this $80,000, they could either have raised it to be $100,000 as rent to make a profit of the same $20,000 a month, or they could have used $120,000 as their mortgage and possibly rent it out for $130,000 to $150,000 a month to earn the same $20,000 as profit each month, right? So what that means is there's actually a big jump here. There's almost a 100% increase in mortgage payments, which means that rental rates have actually raised. So if we're referencing this $80,000 here versus the current rental rates of $110,000, there's actually a 37.5% increase in rental rates, even though there has been a 100% increase in mortgage rates. So I know sometimes tenants on social media are wondering what is happening with the rental rates in Jamaica. This is what is taking place. And to be honest, it is of my professional opinion that as long as mortgage rates tend to go up, rent will also continue to go up. As discussed in our sheet, BOJ has actually cut their rates twice. So the Bank of Jamaica from 2024 in August had moved from 6.75% to current rates of 5.75%. However, as it relates to mortgage rates have been constant for the last 2 years. So even though the BOJ has dropped their interest rates, mortgage rates are still ranging between 8.5% to 11%, which is why I wanted to clarify the purpose of the BOJ. So while their main activities include policy making, they cannot necessarily force the banks to come down. It's similar to KFC chicken. If you're a Jamaican, you understand this example. When chicken prices had raised, KFC had raised. But when chicken prices went down, KFC prices are still the same. So it's very important to notice these things and know as a tenant what you're expecting going into the rental market, and as a potential homeowner who intends to be a landlord, what type of rental rates you will be looking at, and to be careful of the type of properties that you're buying so as to not to overprice your rental. What do I mean by overpricing your rental? Let us use two different areas. Let's use Phoenix Park Village and let's use Norbrook. Okay. Now my camera lady asked me to throw in Oak Estate, which I'm going to put in red because this is actually a great example of the different rates in Portmore versus Kingston. So Norbrook, you know, upscale area, decent place. Norbrook rentals go for about, I'd say between 120,000, 120,000.
180.
180K, right? Now, Phoenix Park, the rental rates we used were 110K to 120K. You notice there's a similarity between Norbrook prices and Phoenix Park prices. Now, Oak Estate is a new development in Portmore where the prices range between, they started out with about 27 million and they're selling for about 34 now.
But the rental over there is
But
like,
the rental
it's like
rates,
140. Like 120 to 140.
actually, the rental rates there go between 150 to 220, and I've even seen some as far as $230,000.
Those are the 3 bedrooms, 3 bathrooms.
Yeah. So these prices in an area like Portmore, they're going to be a problem, sooner or later. And I'm not saying Portmore is a bad area. I'm not saying, Portmore isn't what she says she is. But at the end of the day, location matters. And right now, the real estate market, in my opinion, is headed towards a peak. And what do I mean a peak? It means that mortgage rates and the rental ranges are pushing the general rates for certain areas. These are not normal Portmore prices. In fact, Norbrook, which is an upscale community, they're competing with Oak Estate, which is in Portmore, which takes a considerable amount of traffic to go to in the evenings, which is not as close to Kingston as most people would like. And so this is going to create a problem sooner or later. But at the end of the day, these homeowners, they have no choice, because for a $34 million mortgage, their mortgages are probably close to $200,000 a month, right? So again, rental prices directly correlate to mortgage rates. And until the banks decide that they're going to cut interest rates, this is not going to get any better. Even if it's a case where the listings are on the MLS for a lot longer, which has been happening as well, these are all strong indicators that the market is changing. Persons are now uploading rentals, especially Phoenix Park, and they're sitting on the market for 2 and 3 months before they're rented. And a lot of tenants look at it to say, oh, the landlords are being unreasonable, the landlords are trying to pay their mortgage. Well, let's be honest, guys, if you own a home and you're renting it, at the very least, you do want to pay your mortgage before you can take home a profit. So all of this to say, rental rates will never go down until the banks drop their interest rate. All right, guys, so we're going to wrap up. So in conclusion, real estate is a very tricky thing, and there's so many factors that go into pricing, buying activity, rental activity, and it's not always just as simple as the landlord wants this or the landlord wants that. So, in a sense, I think eventually mortgage rates will come down. From my perspective as well, a lot of properties have been on the market a little bit longer than usual, which would suggest that, the pricings are an issue. In addition to that, a lot of offers as of late, depending on the price range, because all right, guys, so we're going to wrap up. So in conclusion, real estate is a very tricky thing, and there's so many factors that go into that matters too. A lot of offers are being accepted on the asking, while for some areas, a lot of offers are still being accepted over asking because that area is in such a high demand. That matters too. A lot of offers are, but as it relates directly to banks and their mortgage rates, my conclusion is this. Right now, we're heading towards pushing, but as it relates directly to the limits of the real estate market, pushing the limits of the mortgage market. I know about 2 weeks ago, First Global Bank announced the limits of the real estate market, a 1% deposit. However, that is only applicable to Silverstone in Old Harbour and Chester Creek in Portmore. However, a 1% deposit. Let this be an indicator that the mortgage market is going to shift. They would not have done that if there wasn't some stiff competition needed in the banking industry. And I trust that a lot of other banks are going to be following suit in short order, whether it's through promotional packages or a slash in mortgage rates, which is good for you if you're a buyer, because it means that you have more purchasing power. It's also good for sellers, because in a way, if there are more motivated buyers, it kind of also affects how you can negotiate or put out your sale price. Because if there are more buyers, you may or may not need to accept offers on the asking price anymore. So everything is connected. Now, I'm going to be doing more videos like this, so if you enjoyed the video, go ahead and subscribe. Send this to a friend. If you're looking to purchase property in Jamaica, you can maybe watch this video and compare the different rates out there. If you need to speak to a banker, go ahead and give me a call at 876-465-8811. I can connect you with reputable bankers. And if you're considering to get your home sold, let's book a consultation and discuss your selling options and what would be a reasonable price to get your property sold in less time, so it is not sitting on the market too long. Thank you for watching this video, and I'll see you soon. Bye.